weekend all. Ira Epstein of Linn Associates with your financial market wrap-up. And this is for the weekend edition of our video that covers markets a little different. This is Friday, the 14th of June, 2019. And as I said, we start off with the weekend edition, and we'll look at a chart first of a monthly version, then everything else is of the week. And the idea is to get the bigger picture of what's going on in the market. Now, we know that this coming week, everybody's going to be looking at the Fed, and I don't think the market is anticipating a June move by the Fed, but the wording is going to be the key. And now there's bets. Is the word patience going to stay in the statement or not? So just giving you a heads up as to what the market looks at. After this week, we turn our attention to the G20 meeting the week after, and will Presidents Xi and Trump meet? Will they do anything about these trade wars that are going on and the two of them not having the countries talk to each other, really? We'll see if things get back on track or if we've got a longer wait for that and how that impacts all these markets. So as you can see today, we finished off with a mixed session with the Dow up but the other markets down. Chip stocks getting hit. The Hui impact is starting to be felt. Broadcom's getting hit. Other markets like that. We know that what we're dealing with right here in the in this part of the energy complex has to do with the fact that tankers got hit. The U.S. is pointing the finger at Iran. Iran is saying they didn't do it. There's videos of one of their ships by one of the tankers. And today, the more ominous thing is that they had boats preventing the towboats that were going to bring those tankers in from doing so. So don't know where that's at. In grains, it's a weather market. In the nat gas, will they get a forecast that calls for warmer weather? Or is it just going to stay on that cooler side, more normal, which doesn't give a lot of bid into that market? So let's go first and see what we can get here and see if I can get this to move. There we are, finally caught. All right, it's like your weather channel. Monthly area chart of closes. As you can see, the market came down, challenged the 18-month moving average in red, and has bounced away from it. What you wouldn't want to see on a monthly basis is getting back under that disaster that we had in May. And you can see how this market was down and down hard in the month of May, down 200 points, and we have made up 138 of that. So you wouldn't even know what's going on there, but it's only June 14th. So there's a ways to go on this month. When we come to the weekly chart, you can see how the market has rebounded, and this goes back again to May 31st, where the market was down hard at 27.52. It came screaming back up. And then it has continued a bit higher this week, up about 15 points. A little bit of a concern. The pattern in the market, well, we had a big drop and a bounce from there. Now the question is, can we clear these highs? And because that's a resistance zone that you have in the market on a closing basis. When we take a look at this chart, this starts to give us on the weekly chart what's going on. And when I take it here and put the swing line, you stepped out of a downtrend because you had one in place in this pattern, lower highs, lower lows, ending the 31st of May. Then we came up last week with what's called an outside week up. And as long as you don't take out the low of an outside week up within 2 weeks after it, so this week we didn't do it, next week's going to be the key, and I'm not saying it's going down there, but that is what you would not want to take out. If you did, it would spell trouble. But what is trouble defined as? Let's put some moving averages on. The 18-week moving average of closes is right here. We got over it by the end of last week. We accelerated further this week. If this low were taken out, one of the numbers that comes into play is the 100-week average at 27.10 and then the 200-week. Another thing to look at on the chart is the algorithm called a Bollinger Band. And that algorithm is designed to have the market trade within the bands 95% of the time. Another way to look at it is the first time you make a run to the lower band or to the upper band, it would be resistance and a potential support zone. Got it? And you'll see that happen at different areas on the chart as it gets there back and forth and it backs away a little bit from it because a lot of traders watch this. The last thing I put on the chart is the momentum as developed by the slow stochastic. Now, I know a lot of people use MACD, and that's great. I found a way to use this that I'm just more comfortable with. So I see momentum is sort of flat. It's trying to come up, but sort of flat. It was pointing down, and I think you'd agree with me. It came up when we had this big reversal. Now it's back here, but a down week here could make this market, because it works with the price, go either way. We'll see where we're at. Are we trending on a weekly basis? You're really not. You've got a lower low, a higher high. The bias is up, though, because you're over the 18-week average. On the first challenge of the 18-week, just like we did here, I would not be surprised at that support if the market decides to pull backwards. We'll see what goes on. Let's assume it goes up. The upper Bollinger Band at 29.71, 70, 75, right in there, that is the number. And so that would be the resistance point. In the NASDAQ, you're much closer to just the 18-week moving average of closes, not like the S&P, a little further above and got over a previous high. In this market, the pattern's been different. You didn't develop the downtrend. You just plunged, and you've come back up. So these are called vertical moves. They're very difficult. They're frustrating as can be for a number of traders because you don't get the higher high and low pattern. Again, I don't see us trending here. I see momentum is pretty neutral. I see bias up because you're over the 18-week average, and I don't have a trend at play. In the Dow Jones, very similar to the S&P, you slid down. This was a cleaner chart. It even hit the lower Bollinger Band and the 100-day average. Then you had your reversal up, and now you're sort of hanging just right at that 18-day average of closes. You're over it, but you're hanging in that area. The question is, do we get to the upper Bollinger Band, which would be a basically new high area? So got to watch that and see what the market can do. Is it going to make a run there? In the Russell, this is much more similar to what we were looking at in the NASDAQ. You have the higher high and lower low. Now, admittedly, on the daily charts, the Russell's much cleaner looking. But right now, it's got two levels of resistance. It's got the 100-week average at 1547.75. That's the green bar here. And the 18 bar at 1555, let's call it. Those 2 points acting as resistance. You're bouncing. You have not turned momentum up. You have a higher high and lower low and downside bias. As we come to the VIX has a pattern of higher lows, but now lower highs. I'm going to call it not trending. What it tried to do is get out of the upper Bollinger Bands and instead got thrown right back into this sideways action that the market has. You're not seeing the market go into a downtrend. You're not seeing it able to do much except stay in an uptrend. It is in an uptrend in a legacy basis. The bias is up, but again, you don't hide from the fact that you got lower highs, higher lows. So while the legacy of the swing line was higher highs, higher lows to start with, this alters it. I think you're neutral in the market. In the 10-year note, the market came back, and on the close today, just settled back under the settled under the upper Bollinger Band. But this has been in a tear to the upside. It's been in a true uptrend, higher lows, higher highs. Got a couple of weeks over the upper Bollinger Band and pulled back under it. Still acting very bullish. No sign that it's backing off yet. Momentum still pointing up. And yes, you can ride Bollinger Bands for a very long distance. It's a sign of strength. When we come to TLT, if we look at this chart, you had 2 weeks in a row, just like you did in the bonds up. Market pulled back. I think it was the bonds that I had here. That was 10-year notes. Short memory. And the market pulled back under it. It's what I call not ahead of itself. It's got higher lows, higher highs. It's holding on here at Bollinger tops. That's a bullish sign. In the dollar index, the market is all over the board. It's unable to penetrate the upper Bollinger Bands. It gets thrown back, doesn't follow through, and gives you a little pop here. So we finished the day at 97.57, over the 18-week moving average of closes. The momentum of the market is trying to point back up. The market got a strong bid today, but I would expect to see resistance show wherever the upper Bollinger Band is, and right now it's 98.01. In the eurocurrency, it's the mirror image flipped of the dollar. You have a lower low, higher high. The market today finished off at 112.08, let's call it, under the 18-week average, so the bias is down. The momentum, it's trying to grab a trend here, but it would be to the downside. The momentum is, but don't have a swing line trend. Support could come in at 111.54. Good time to go to Europe, don't you agree? Then we get to the Mexican peso, and on a weekly chart, it looks very different than it does on the daily charts. First off, you had a pattern here, and I will come to it. This high of 52.59 was higher than this high. I don't know why I've got this other arrow there. This comes down. This arrow doesn't belong there. That's just my mistake. And as the market comes up, I'd have another arrow pointing up. We're not in a succession of a trade. You have a higher high, lower low. I'm sorry, it's confusing. But it's the 100-day average that's the resistance. So here's your resistance point. Your support point is back at the 18-week average of closes, and the market's looking for a breakout one way or the other that it can mount something on. But even if it takes off to the upside, you still have the lower low, and then you'd have the higher high. It's a difficult market there. In the Canadian dollar, we have a pattern of a lower low, higher high. And you finished this week at 74.53 underneath the 18-week average of closes. So even with all the good things going on, talking about trade deals, and I know Mr. Trudeau's coming into town to speak with the president and all that, the market, when you go to the longer chart, it's just waffling right here, unable to get anything going. The Japanese yen has seen a lot of buying as there's been a lot of fear due to Iran, the U.S. going at each other again. And the question here, of course, is you've got the higher lows, higher highs. You got ahead of yourself by getting over the upper Bollinger Band. And this week you pulled back under it. So the market's in line, but still strong. Bitcoin, lower low, higher high. Momentum staying to the bull side. The bias is up, but this chart is not as clean as the daily chart. The daily chart has an uptrend. This one's sort of waffling, which makes sense. The 90 area could be the next resistance zone. Facebook has its own digital currency coming out, and we'll see if that takes anything away from the Bitcoin market. In the Brent, what we have here is a market that soared to the upside, had a small correction, and got a bounce this week. But Brent is staying over WTI. It's staying over the 18-week average of closes. It's got a nice bid into it. And what the market did on the bigger picture is you were in a downtrend. You came down here on the week of the 31st. Last week, not this week, last week you went to the lower Bollinger Band, finished the week out at 63.29, well off those lows, and now the market is starting to lift itself a little bit. Will it be able to get back up here? Don't know. The market got a bid more because people are fearful of losing supplies of oil than there is the demand for it, because if you looked at the EIA and IEA reports, the two different agencies, you see that both are in line with getting reductions for demand in a good part of 2019. They say we'll pick up 2020. We'll find out. But when I come to WTI crude, it's the same thing. Lower highs, you hit your downside targets, the lower Bollinger Band, and you're getting an objective bounce. That's about all that I can say. I see strong resistance between 58 and 60. That seems to me pretty far away. It's 52, 51, so I don't know that it has the muscle to get there. In the rebob gasoline, the market is still in the downtrend. Lower highs, lower lows. Momentum is still putting down. Resistance 182 to 189 in the market. The daily charts will be interesting. If you go to them, see if you lost your embedded reading on them. That'll be important. In the heating oil, the market is fighting to get back over this lower Bollinger Band. You finished today at 182.94. That number is 182.98. So it came up trying to get over it. It's another week under it. That's a couple of them now in a row. This week, last week, I believe you were under it too. And the week before, you finished at 184.18, and that was under the lower Bollinger Band. That's 3 weeks in a row. So I give the market a 2% chance on a weekly basis next week, if you study algorithm theory, of staying under it. It can do so. 5 is really pushing it. So if you have another week down, it really starts pushing the numbers. You put it together, you have a game plan, and that's what I do each morning. I wake up, read, and then I start recording a video. Now, I try to get the video recorded at approximately 6 to 6:15 a.m. Then by the time I render it, put it out for you, it'll be typically before 7 o'clock unless I run into a computer issue, and you do when you're recording. Those things just happen. But I record 40 futures charts, and I take 5 ETFs typically. I'm assuming you'll have a cup of coffee like she was doing. And I'm going to cover the markets each and every time in this exact sequence. You can pull on the bottom, and as you do so, your cursor will light up, or the recording will. It's going to tell you which one of these sections you're in, or you can click right over here. The names of the sections will be there, and you'll be able to go right to that section. So if you don't want to know about grains and you just want to know energies, just click on the energies, it'll take you. Come back and you go to any of these in any sequence you want, but this is the sequence that I'll record it. Now, the difference between this and what you see me doing right now is this. I am able to say, buy here, sell there. This is what I think you should be doing. This is what the pros are doing right now. Here's your stop order. Here's the trade. So I can make trade recommendations. And the idea there is they're in and out trade recommendations. So let's assume you're thinking of a trade you want to make, and you're going, gee, this market can have support or resistance there. I'm trying to be your mentor. And I find that very important, because if you're like me, I want to know what the other pros are thinking that I respect. So if you think you respect what I'm doing, you keep looking at these videos, well, for 26 cents a day, you could look at our video, the one in the morning, and now you're getting actual buy-sell. It's much more in-depth than what you're seeing here. To find out more about it, simply go to our website under the keywords of research or education, Ira's morning video, and away you go. I'm Ira Epstein. Have a great weekend. Talk to you Monday.